Yes, sir.
Yes, sir.
Yes, sir.
Guys, you can start noting down this question, this example. I hope, guys, you are now noting down these points, right? Everyone?
Yes, sir. Yes, sir.
Yes,
Okay.
sir.
So,
So, guys, we have been given balance sheet of firm of A and B as on 31st March 2025. And since they are admitting C in their firm on this date only, they have done revaluation of assets and liabilities, and that revealed the following about assets and liabilities. So, using this information, we have to pass necessary journal entries and we have to prepare revaluation account. Right, guys? You know that journal entries related to revaluation are only three. The first journal entry would be for losses, where we debit revaluation account with the total loss, and total loss we get to know from the assets whose book value is more than market value by taking those liabilities whose payable value is more than book value and by recording unrecorded liability, by crediting unrecorded liability. So if you see we have loss here, we have to depreciate plant and machinery 2 rupees 1,90,000. Means we have to bring down its value to the level of rupees 1,90,000. As of now, its book value is 2,50,000. We have to bring it down to rupees 1,90,000 means we have to decrease it by 60,000. So 60,000 is decrease in the value of plant and machinery, and that is why it is our loss. To decrease any asset, we credit that asset. And that is what we will do here. We will credit here plant and machinery account with 60,000. Have you all understood this, guys, or not? I'm
yes,
asking,
sir.
Yes.
guys.
Yes, sir.
Yes, sir.
Anna, Harsh, have you got this?
Yes.
Yes, sir.
This is another asset, the value of which we need to decrease. Stock, which has book value of 32,000, includes dead stock of rupees 4,000. Means there is one stock included in this 32,000, which will not fetch anything. So we need to decrease the value of stock by 4,000. For that also we will credit the asset account, that is stock account, by 4,000. Debtors are expected to realize rupees 20,000 as of now. In our books, after provision for doubtful debts, the value of debtors is 23,000. But our evaluation revealed that debtors are expected to realize only rupees 20,000. So we need to decrease our debtors by 3,000 more, and that is only our expectation or anticipation. We are not very sure, and that is why this 3,000, that is difference of 23 and 20, we will credit to provision for doubtful debts, and that is also a loss. So that also would be credited. So here we will also credit provision for doubtful debts account with 3,000. Is it clear to everyone, guys?
Yes. So why are we taking a provision for that for this account?
See, because it says that debtors are expected to realize. It is not certain. If the question says that debtors include, or it says that there are bad debts of rupees 3,000, then we would have decreased the debtors. So here there is no mention about bad debts, the actual loss. They are talking about only anticipated loss. And whenever we have anticipated loss, we use provision for doubtful debts account. Have
Okay,
you
sir.
got this? Yeah.
Yes, sir.
A repair bill of rupees 23,000 was neither recorded in books nor paid. So there is a bill, we got some repairs work, and bill of that was 23,000. Neither it was recorded nor paid. So now we will record it. And when we record, we will have liability created in our books. So this is an example of unrecorded liability, means increase in liability, and for that we will credit outstanding repairs account with rupees 23,000. Okay, so out of these, the points of losses are these only: about plant and machinery, about stock, about provision for doubtful debts, and outstanding repairs. So total loss here is of 67 and 23 means 90,000. The narration here would be revalued various assets and liabilities. You do not need to write about individual assets and liabilities here at all. Now the second point for the profit upon revaluation. This was loss which we got to know after we did revaluation. So tell me guys if you have any doubt anywhere in this. Anyone? Anyone
No,
guys?
sir.
Okay. Now we record profit upon revaluation. So here we have profit. We have to appreciate the value of land and building by 20%. By 20% means we have to increase it by 20%, 20% of the book value. So book value is 4,30,000. 20% of this is 86,000. So we need to increase the value of land and building. And whenever we increase value of an asset, we debit that asset. So here we will debit land and building by 86,000. Rent of rupees 3,000 received was mistakenly added to creditor's account. So we received rent, we debited cash or bank account for that, and instead of crediting rent account, we mistakenly credited creditor's account. It means now we need to decrease our creditors because this 3,000 of rent unnecessarily got added to creditors. And that is why creditors are 30,000. Otherwise, the actual creditors are only 27,000. So to decrease any liability, we debit it. And that is what we will do here. We will debit creditors account with rupees 3,000. Okay, I missed one more thing. Yeah, okay, no, it's correct. Yeah. Now the other profit that we have is in investments. Book value of investments is 6,000, whereas its market value is 7,000. So we need to increase our investments by 1,000, and for that we will debit investments account. So this is how we have increased our these two assets, and we have decreased one of the liabilities, that is creditors, and they both, sorry, these three, that is increase in two assets and decrease in liability, imply profit for us. And to record that profit, we credit revaluation account, right? The last
So,
item of
can
profit,
you
yeah, tell me, Akshita.
um, can you tell the concept behind debiting revaluation account when there is loss?
I will. Let me first complete this. As I told you yesterday, we still need to discuss many things about revaluation account, right?
Yes, sir.
And I will explain you many other points out of this question. So as of now, you all please have your focus on what I'm explaining you. What I'm not explaining you, and if you have any doubts out of that, please do not ask them. Keep them with you. Let me complete today's session. By the end of that, you will all your doubts automatically will get clarified. Right? Okay, the last point of profit is here. There is an office equipment which has been fully depreciated in books. It means it has zero value in books. But since it is available in the business physically, it can fetch rupees 800. So for that, we will not sell it as of now. We will simply bring it back in our books by debiting office equipment account with rupees 800. And this is an item of profit for us. So here we will debit office equipment account with rupees 800. So these are the 4 points where the firm has profits upon revaluation. We have increased the value of three assets and we have decreased the value of one liability. And they all denote profits for the business. And to record the profits, we credit revaluation account. And that would be created with the total of these, that is 90,800. Right, guys? Here also we will put the same narration, we will use the same narration, revalued various assets and liabilities. Okay, for a specific purpose, I am changing this amount to 24,000 rupees. You also please do this in the question, guys. Everyone, please do this. Have you all made the changes in point number 7?
Yes. Yes, sir.
So here
Yes, sir.
instead of 23, we will have 24,000. With this amount will increase by 1,000. So the total loss here is 91,000. So total loss upon revaluation is 91. Total profit is 90,800. It means there is net loss of 200 rupees, the difference of these two amounts. Since the debit side of revaluation account is more than its credit side, to close revaluation account, we need to credit revaluation account with rupees 200 so that both the sides are equal. Both the sides become equal. And for that, we will credit revaluation account, and this amount denotes net loss upon revaluation, and that loss is to be borne by the old partners A and B in their old profit sharing ratio. So loss here is 200, which is 91,000 minus 90,800, and that will go to the two partners A and B. Their capital will get decreased, and it will go to the partners in their old profit sharing ratio 3 is to 2. It means A's capital would be debited by 120 and B's by 80. That is 200 into 3 by 5 and 200 into 2 by 5 for P. And this would be the narration. Debited old partners' accounts for the loss upon revaluation in their old ratio 3 is to 2. Revaluation of assets and liabilities. Right? You please do one more thing. Add here in the question at the end. You have to add this also, guys. Have you all added this, guys, in the question?
Yes, sir.
Yes.
Akshita, Harsh, Abir, have you noted down this?
Yes.
Harsh, have you noted down this? Harsh, I'm asking you. Okay, so now guys, we will post these entries, these three entries, because in all these three entries we have revaluation account. So first we will post this entry in revaluation account. Revaluation account is a ledger account. So as you do ledger posting, the same we will do that. So on the debit side of revaluation account, we will write two plant and machinery, two stock, two provision for doubtful debts, and two outstanding repairs account. With their respective values, that is 64, 3,000 and 24,000. So I hope guys you all remember how to post journal entries into respective ledger accounts, right? Ana, Abhi, Rakshita and Falak.
Yes.
Yes, sir.
Yes.
Yes, sir.
Right, Akshita?
Yes, sir.
Okay, on the credit side of revaluation account, we will write land and building account, creditors account, investments account, and office equipment account. With their respective values, that is 86, 3, 1,000 and 800. So this is the profit side of revaluation account. This is the loss side of revaluation account. Now we will do the total of both the sides, and whatsoever total is higher, that we write in the total columns here and here. The debit side here is more. The total of debit side is 67 and 24, that is 91,000, which we already calculated here. This one. So I'm writing 91,000 on both the sides. The total of credit side is 90,800. But here we have written 91,000. So there is a difference of 200. And that is the loss for which we are debiting old partners' capital accounts. So on the credit side of revaluation account, we will write by partners' capital accounts. A's capital would be debited by rupees 120 and B's capital would be debited by rupees 80, as we did it here. And this is how guys our revaluation account is also done. Harsh, why you're always on and off? What is the problem? Harsh, can you hear me?
Yes, sir.
What is the problem, Harsh?
The network issue, sir.
Harsh, please get that corrected. Otherwise, you will lose a lot, I tell you. Right?
Yes.
So I hope guys you all have understood how to prepare revaluation account. Yes or no?
Yes, sir. Yes, sir.
Yes.
Okay. Now in this question, we also have to prepare balance sheet of the reconstituted firm. What is reconstituted firm? That I will explain you later. We have to pass journal entries only for the above information and not for this one. So I'm not passing any entry for the cash brought in by C into the firm. But yeah, when we make balance sheet, it should reflect in the balance sheet. So the balance sheet of A and B, how it will look like after revaluation, let's understand that, guys. Okay, if you see this entry, here we have decreased the value of plant and machinery by 60,000. Earlier value of plant and machinery in books was what, 2,50,000. You know that all these are debit balances and all these are credit balances. So plant and machinery had debit balance of 2,50,000 and later it was created by 60,000. So now its value in books has automatically become 250 minus 60, that is 1,90,000. So here we will present land and building now with 1,90,000. Sorry, it was for plant and machinery. Have you all understood this, guys, or not?
Yes.
Yes, sir.
Sir, can you explain once again?
See, here we have decreased the value of plant and machinery by 60,000. Before this entry, plant and machinery had book value of 2,50,000. That is, had debit balance of 2,50,000. But after this, we created plant and machinery by 60,000. It means its value has decreased by 60,000. So now its book value, the book balance is 250 minus 60, that is 1,90,000 debit balance. And that is what we will present in our balance sheet. So we will present all the items of assets and liabilities here, what they are after the journal entries of revaluation, right? Have you understood this, Abir, now?
Yes, sir. But the point, assuming that she brings 3 lakh from his capital,
Sorry?
uh, the question which you have also mentioned us, assuming that she has bring 3 lakh of his capital, that I didn't understand.
That you have not understood. Okay, you are so you know that C is being admitted in the firm. So for sure he has to
Yes,
bring some capital, and that is what he has brought here. That information is given to us here. Correct? So that also we will incorporate in our balance sheet. Got this?
yes, sir.
Okay. Here we have also decreased the value of stock by 4,000. Earlier the book value of stock was 32. Now it has been created by 4,000. So now its book value is 32 minus 4, that is 28,000. So I have presented here a stock with 28,000. Clear, guys, or not, everyone?
Yes, sir.
Yes, sir.
Right, Akshita, Harsh, Anna?
Yes, sir.
Yes.
We have created provision for doubtful debts by 3,000. Earlier, PFDD had credit balance of 2,000. This is a credit balance, guys. I hope you all understand this from what you learned in class 11th. PFDD account always has credit balance. So it already had credit balance of 2,000. We created it further by rupees 3,000. So now the balance of PFDD is 2 plus 3, 5,000. There is no change in daters here at all. We have not used the daters account anywhere. So daters will remain same, 25. However, PFDD will increase by 3,000 and will become 5. So now net daters are 20,000. 25 minus 5. And this is what question wanted us to do. Question said that expected value that we would be realizing from our customers from daters is 20,000. And now we are reflecting daters with 20,000 in our balance sheet, right? So I have so far incorporated these 3 points in our balance sheet. Now, outstanding repairs. Earlier, it was not there in books nor in balance sheet at all. It's a liability. So, in liability side, we have now one more liability, that is outstanding repairs of rupees 24,000. So, that also I have taken here, 24,000. Right, guys? So these four things we have incorporated in our balance sheet. Now, land and building is to be debited by 86,000. It already has debit balance of 4 lakh 30. 86 has been debited again. So 430 plus 86 is 5 lakh 16,000. So now the value of land and building is 5 lakh 16,000 that I have taken here. We have debited creditors, means we have decreased creditors by 3,000. Earlier creditors had book value of 30,000, but now since we have debited it because this creditors have credit balance of 30,000. After this we debited creditors, means we decrease creditors by 3,000. So now creditors will reflect at rupees 27,000. 30 minus 3, 27,000. Is it clear to everyone, guys, so far?
Yes, sir.
If you have any doubt anywhere, guys, please do not stop yourself to ask that. Do not hesitate, do not shy at all. Right? Okay. Investments being an asset is being debited here. It means its value is increasing by 1,000. Earlier it had debit balance of 6,000, but now we have to present it with rupees 6 plus 1, that is 7,000. So investments here reflect with 7,000. Office equipment, which was not there earlier in our balance sheet at all, now since it has debit balance in our books of rupees 800, that also needs to be presented in our balance sheet. So here we have one more asset, that is office equipment of rupees 800. So these four items also we have incorporated in our balance sheet, right? Right, guys, I'm asking you all.
Yes, sir.
Yes, sir.
Yes.
Bank loan has not changed at all. So we'll present bank loan at its earlier value, that is 1,50,000. There is no change in outstanding salaries because here we have not used outstanding salaries account anywhere. So its balance is intact, and that is 12,000. Unearned commission and general reserve also have not changed, so their balances will also remain same. So 12, 1 and 7 is for these three items. 12,000, 1,000 and 7,000 for general reserve. Correct, guys? As far as prepaid wages and accrued interest are concerned, there is also no change. Neither there is any change in P&L account. So these values will also remain same, and that is 3,000, 2,800 and 2,200 respectively. So that value I am putting as they were earlier. Now if you see here in the last entry, to divide the loss upon revaluation among the partners, we debited, that is we decreased capital balances of A and B by 120 and rupees 80 respectively. So their capital balances have changed because of this loss upon revaluation, and they have decreased. Earlier A's capital balance was 3 lakh 50. Now it has decreased by 120. So the balance now would be 3 lakh 50,000 minus 120, that is 3 lakh 49,880. And B's balance, capital balance, has been debited, means has been decreased by rupees 80. So now it would be 2 lakh 49,920. We also have new partner who has brought in capital of rupees 3 lakhs in form of cash. It means our cash balance has also increased by 3 lakhs. Earlier cash balance was 51,000, but C has brought in cash of rupees 3 lakhs. So now cash balance is 3 lakh 51,000. So here we have 3,51,000. That's it. We are done with everything, guys. We have increased the value of land and building. We have decreased the value of plant and machinery. We have increased the value of investments and office equipment, and we have decreased the value of stock. We have also increased the value of PFDD, provision for doubtful debts, right? We decreased the value of creditors. We brought in a new liability, that is outstanding repairs, which was not recorded earlier anywhere. Now, because of this revaluation, we had loss of 200. That loss has to be borne by the old partners, and that is what they did in their old ratio. And because of that, their capital balances have decreased by rupees 120 and rupees 80 respectively. C has been brought into the firm with a capital balance of, or with a capital introduction of 3 lakhs, and that capital he has brought in form of cash, and because of that our cash balance has increased by 3 lakhs. Earlier it was 51,000, so now after C's bringing rupees 3 lakhs, the balance has become 3,51,000. So I hope guys you have understood this balance sheet. The total here is 1,77,000, 1,89,000, 1,89,000, and 24, that is 11 and 13. So 2,13,000, 2,20,000. And here we have total of 350, 250, that is 6 lakhs plus 3, 9 lakhs. 9 lakhs minus 120 minus 80, that is 9 lakhs minus 800, means it should be 7 lakh 99,200. Sorry, 8 lakhs 99,200. I took it as 350. This is 250. So 350 plus 250 is 6. 6 plus 3 is 9. 9 lakh minus 200 should be 8 lakh 99,800. I'm sorry. So this is 8 lakh 99,800. The total here was 177, 189, 189, 3 lakh 13, 3 lakh 20. So 320 plus this, that is 11, 12 lakh 19,800. Here we have the total of 7 lakh 6,000, 7 6, 713, 741, 761, 761, 961, sorry, 1061, 1062, 11 lakh 12,000, and this is 8. So 12 lakh 19,000, and this 800 will give us 12,19,800. So whatsoever I have done so far, guys, have you all understood this or not? I'm asking
Yes.
guys.
Yes.
Yes, sir.
Kabir, Harsh, have you got this?
Yes, sir.
Yes, sir.
Okay. Now about revaluation account. Okay, revaluation account, guys, is a nominal account. It is as good as trading account or P&L account. In fact, the other name of revaluation account is profit and loss adjustment account. So what do we do in trading and P&L account? We write on the trading and P&L account on the credit side all the profits or incomes. And here we write all the expenses and losses. In revaluation account, you have to write on the credit side only profits or gains, and on the debit side, all the losses. Expenses and incomes do not come in this account. Or you can say that they also come in this account. How I will explain you that also. Apparently, you find here only items of losses and items of gains or profits. But yes, incomes also come here. So in trading and P&L account, on the credit side, you write incomes and gains, the same thing we do in revaluation account. On the debit side of trading or P&L, you'll write expenses and losses, the same thing we do in revaluation account as well. Am I clear, guys? Now, Akshita, is it clear now? The question that you were asking about revaluation account.
No, sir.
Revaluation account is a nominal account like trading account and P&L account and helps to determine net profits or net loss upon revaluation of assets and liabilities. On its credit side, incomes and gains are presented, and on its debit side, expenses and losses are presented. These incomes, gains, expenses, and losses are found upon revaluation of assets and liabilities. So we do revaluation, and out of that we get to know various income, expenses, losses, and gains. And to record them, we open a separate account that is called revaluation account. On the credit side of it, we record all the incomes and gains. On the debit side, we record all the expenses and losses. If debit side is more than the credit side, it means there is a net loss. If credit side is more than the debit side, it means there is a net gain. Whether there is a net gain or net loss, that is divided among the old partners in old profit sharing ratio. Okay, now Akshita, you tell me what are your doubts, if you still have any doubt.
That's clear.
Sure.
Yes.
So whether there is net gain or net loss upon revaluation, that is divided among the old partners in their old profit sharing ratio by crediting or debiting their capital accounts respectively. Understood, guys, or not, everyone? I'm asking all. Have you understood this?
Yes.
Yes, sir.
Okay. Now,
Yes.
I told that on the credit side we record incomes and gains. I give you an example of income from this question only. Rent of rupees 3000 received was mistakenly added to creditor's account. You understand this point? So what happened in the business? Rent was received by the business. So the business should have debited cash or bank account and should have created rent account. They debited cash or bank account correctly, but instead of creating rent account, they credited creditor's account. Means they increased their creditors. What they should have increased is their income, that is rent. If they had recorded or if they credited rent account, it means their income would have increased. Yes or no, guys? I'm asking you all. If they had credited rent
Yes.
account, their their income surely would have increased, and with that, their profits would have increased. Correct or not?
Yes.
Right? That is what we are doing by decreasing the creditors and crediting the revaluation account. So in one go only we rectified this mistake. How? We debited creditors, and this is how we decreased our creditors. And the rental income, which would have increased the profits, that we have increased here by creating revaluation account. So in this 90,800, this 3,000 is also already included. And that 3,000 has gone on the credit side of revaluation account. Means it has increased the profits by 3,000. Are you understanding this, guys? Here we are not only decreasing creditors, but we are also increasing our profits by 3,000. So the mistake what they did by crediting creditors account instead of crediting rent account, that we have rectified here. If we would have created rent account, ultimately its effect would have been on net profits. Our net profits would have increased. Okay, no problem. Now we have increased our profits by crediting revaluation account. Am I clear? Abir, Harsh, Ahana, Falak,
Yes.
Akshita,
Yes.
Yes.
Yes, sir.
right? Its other name is profit and loss adjustment account, right? Okay. So guys, I am done with this. You already have noted down everything till here. Now you have to start noting it down from here. Please do this fast, everyone. I would be off for 2 minutes from my screen. You, but guys, you continue with this. So guys, this is what we write on the credit on the debit side of revaluation account, that is decrease in book value of assets, increase in book value of liabilities and unrecorded liabilities. Now on the credit side, we write increase in book value of assets, decrease in book value of liabilities and unrecorded assets. Then guys, have you all made the revaluation account as well?
Yes, sir.
Yes, sir.
Yes, sir.
Have you also marked the way I have marked this in blue box here both the sides?
Yes, sir.
Abhi, Rakshita, Harsh.
Yes.
Yes, sir.
Harsh, have you noted down all the journal entries?
Yes, sir.
Okay. Make this balance sheet, guys. Now, Anna, Abir, Harsh.
Yes, sir.
Yes, sir.
Anna, you also have noted down this, right?
Yes, sir.
So, guys, to a very great extent, we have seen revaluation as well, though we yet have to see many more things about revaluation. When we see the third point of adjustment for admission of a partner, we will talk about revaluation again. But yeah, by taking this example, I have explained you many a things about revaluation, right? In case you have any question, any doubt out of today's session, you can ask it now, guys. Okay, one more thing. Here I have mentioned reconstituted firm. Reconstitution of firm means whenever there is any change in partnership deed, that is called dissolution of old partnership and bringing new partnership in place. And these two together is called reconstitution of a firm. So whenever there is any change in partnership deed of a firm, that is in any of the terms or conditions among partners, including their profit sharing ratio, it is called dissolution of old partnership and bringing a new partnership into place. This whole is called reconstitution of a firm. So here what has happened? Because of C's admission, for sure profit sharing ratio of A and B has changed. Now it will not remain 3 is to 2 for sure. Correct? And that change means change in their partnership deed, and that is reconstitution of a firm. Have you all understood this, guys?
Yes.
Yes, sir.
So whenever there is any change in partnership deed, even in one single point of partnership deed, there is a change. It means there is reconstitution of that firm. Note down this, guys, first. So this balance sheet actually is balance sheet of reconstituted firm. That is why I have written here after C's admission. I could also have written here balance sheet of reconstituted firm of A, B, and C. I hope you all have understood this, guys. Please note down this fast.
Yes, sir.
Yes, sir.
Yes,
Abhi,
sir.
Harsh, have you noted down this?
Yes, sir.
So whenever, guys, there is reconstitution of a firm, it means there has been dissolution of their old partnership. It is not dissolution of partnership firm. No, that is a different thing. For which we have a separate chapter. The last chapter in partnership accounting, that is dissolution of a partnership firm. Here it is only dissolution of partnership, not of partnership firm. And when we say dissolution of old partnership means their old partnership deed has changed now. Correct, guys? So that's it, guys, from my side for today. What we have done today, you need to revise it today itself, guys, for sure. And when you do that, you will come up with many more doubts. Please do that today itself, guys, everyone.